Hello and welcome to Markets Today on CNBC-TV18. I'm Nika, and here are the top stories for this evening. Stocks rise for the third straight session. Sensex gains about 600 points. Nifty up nearly 200 points, hitting its highest level in 2 weeks. State Bank of India reports strong loan growth and a sharp improvement in asset quality, but Bank of Baroda posts a sharp decline in margins and a jump in slippages. It also cuts its guidance. The stock slips. It's a shot in the arm for Divi's Labs. Positive management commentary helps the stock rally. Revenues come in line while profits were a miss. Indigo takes off on a solid second quarter. Revenue soars 19%. Zomato gets a thumbs up from analysts on a good, strong showing. And the guidance and Policy Bazaar owner PB Fintech stays on track to break even this fiscal, and delivery sees an uptick in October after what was a soft Q2, suggesting better days ahead. The stock sees some green. Strong guidance and 2 acquisitions buoyed JSW Infra. Aarti Industries jumps on a Q&Q recovery. JK Cement gains on strong volume growth, while improved margins boosts EQ Lighting. But a sharp dip in sales and profits hurt Gujarat Fluoro. All right, well, let's also tell you what we have lined up on the show for you this evening. We'll bring you some expert opinion from Dheeraj Agarwal of Ambit Investment Managers. And in big voices, we have SBI Chairman Dinesh Khara. All right, straight to the first story then, onto the stock markets, where we saw green on the screen for the third straight session. The Sensex gained about 600 odd points. The Nifty gained nearly 200 points to end what was at the highest level in 2 weeks. After a sharp sell-off, the markets have been reclaiming lost ground over the last 3 sessions. Surabhi Upadhyay is here to wrap up the market action for us.
Well, it was a flying start to the week, and the bulls would be in festive spirits for sure, with the Nifty reclaiming 19,400 today. And we have to thank global cues for this. The risk appetite was really back on, with the softer print coming in on the U.S. non-farm payrolls report on Friday. U.S. bond yields were cooling off, and that whole narrative of high rates and that big fear was kind of behind us, at least as we started off on Monday. So the result was a very buoyant Asian screen, and India was part of that big rally as well. In fact, in doing this, the Nifty has moved very close to reclaiming certain critical technical levels as well, the 20 DMA and the 100 DMA. The 20 DMA comes in closer to 19,423, and we're almost over there. It wasn't just a large cap rally. The mid cap and the small cap market was literally on fire as well. The mid-cap index was up as much as the Nifty. That's a gain of about 1%. And the small-cap index was firing away with a gain of about 1.5%. Extremely widespread participation, and that was another good sort of internal coming in from today's trading action. It wasn't just centered around 3 or 4 key stocks taking the market higher. No. Whether it was banks, whether it was healthcare, you look at consumer stocks, look at auto stocks. It was a very wide move across the market today. I'll just tell you about some of the Nifty gainers, for instance. You had Divi's moving higher after the company's conference call commentary was very well received by the market. Almost 3-4% up on Divi's. Hero Moto and Eicher were in top gear today, top form. L&T continued to work well for the bulls. And then there were the banks, as I said, IndusInd, Axis. Most of these private sector blue chip banking names, they had a good session today. Mid-cap results got rewarded very well wherever the numbers were adding up. And that's telling you about the market's mood, its risk appetite. Look at Aarti Industries, 10% up on this chemical stock, because there's at least sequential improvement coming in the business performance. JSW Infra, great set of numbers. JK Cement, Bharat Forge, and some strong commentary from Baba Kalyani coming in. That stock was up about 5%. And Zomato, 10% on Friday. Another 5% on top of that today. So it's telling you that the market has, that risk appetite well and truly back on. Today's listing, by the way, was also a good one. Cello World managed about a 20% gain for itself on day one. The only area of the market where there was red was actually PSU banks. Some of that was just profit-taking, and some, concerns around asset quality. For instance, you had, and of course, the NIM compression. So you had Bank of Baroda falling almost 4-5%, and SBI was a little subdued. But otherwise, it's a market which is in full festive mood, at least as of now.
Okay, all right, Surabhi. Thanks very much for that. Well, let's get you some opinion now. Dheeraj Agarwal, Managing Director of Ambit Investment Managers, said that the market recovery depends on the festive season. He added that foreign institutional investor holding has been static in the Indian market. Listen in.
Margin impact which is flowing through the bottom line, which will actually start to fade away from next quarter onwards. So all hope at this point of time rests on the proverbial festive season demand and the second half demand recovery. We have been, every single year we wait for that. So let's see how that pans out. In the last few years, we have seen that the state election results haven't really mattered much as an impact on the markets. It will probably cause a few days of volatility into the results season for the state elections. If you actually zoom out, forget about the last 3 months, last 6 or 7 years, if you see FI holding in Indian markets has been pretty static in the 19 to 20% range. So this is a very, very strange case. Whenever you meet any global investor or asset allocator, they all love the country, they all love the growth which the country is promising or showing at this point of time. But when you come down to actually stock picking, they find the markets a bit expensive.
Okay, some important opinion there, but on to the second headline now. Bank of Baroda fell close to 4% after the bank posted a sharp decline in its margins and a jump in slippages. That's not all. The bank also cut its guidance. Abhishek Kothari is here with the details on it.
Well, Bank of Baroda reported its Q2 FY24 numbers and the net interest margin surprised on the negative side. It was weak and the guidance on net interest margin has been cut as well for FY24. So net interest margin declined 20 basis point quarter on quarter after declining 26 basis point quarter on quarter in Q1 FY24 as well. It came in at 3.07% versus 3.27% in the previous quarter. The net interest margin guidance for FY24 has now been cut to 3.15% plus or minus 5 basis point versus the 3.3% guidance that they had earlier for FY24. Slippages were at 4,751 crore. They had a one-off slippage from an airline account worth about 1,774 crores which slipped into NPA. A gross NPA ratio of 3.32% is perhaps one of the lowest that you are seeing in last 34 quarters, and that was aided by the fact that write-offs were elevated in this quarter. So the write-offs were at 3,409 crore versus 2,730 crore in the previous quarter. The annualized credit cost was at 6-quarter high of 0.89%. However, it remains well below the 1% mark. CASA ratio, it has declined to below 40% level. First time in last 12 quarters that it is below the 40% level, now at 39.9% versus 40.3% in the previous quarter. On the positive front, business momentum is really strong. Deposits are up 14.5% YOY and about 4% sequentially, while the advances growth is at 17.3% YOY and about close to 3.5% sequentially. In terms of their P&L performance, the NII was below our poll and other income aided the PAT to be ahead of our poll. Back to you.
Okay, all right, Abhishek, thanks very much. For that, staying with banks, State Bank of India fell over 0.5% despite reporting strong loan growth in the second quarter. The bank also saw a sharp improvement in its asset quality. Speaking to CNBC-TV18, the bank's chairman Dinesh Khara said that he expected to see credit growth of 12 to 14% for the full fiscal. He added that the bank should be able to maintain its net interest margins at current levels as well.
We have scaled up our provisions, which we were making provisions at the rate of 10% from November onwards, but now we have scaled it up to about 14%, and that actually took away about 3,900 odd crores. So that is one of the reasons why you would probably see this kind of a behavior. And in addition to that, there are some other one-offs also, which are essentially relating to the MTM write-backs. I will stick to the advice in terms of the loan book growth of we expect that our loan book should grow in the range of 12 to 14%, and that is the kind of the number which I would expect. Though of course this is a busy season now, and now we will get to see some better growth even in our retail loan book also.
Okay, well, that is State Bank of India. But the third headline today, Divi's Labs gained 5% after it reported what was a mixed bag in the second quarter. While the revenues were in line with estimates, profits came in below the street estimates. But what really helped in terms of Divi's Labs this time was the conference call. So they did have their conference call during market hours at 2 p.m. They have indicated for the earnings, there was an inventory write-off of around 20 odd crores, but they did see good growth in their segments. They anticipate numerous growth opportunities. Demand remains stable despite continued pressure in the US markets. Now, they seem to be very bullish on the custom synthesis business. They continue to garner interest from several customers. It is a growth engine which is really driven by big pharma. They're seeing strong growth after a pause due to COVID-19. Two big custom synthesis projects have now gone full scale. They see an opportunity in complex amino acid products as well. They are the only player outside of China, so they see a big opportunity size there. They are one of the most backward integrated companies. They did also mention how the US FDA commissioner came and did see, visit their plant and did give positive feedback. So that was probably a lot in terms of commentary, which aided the stock gaining around 4 to 5%, despite the margins coming off on a Q-on-Q basis. But let's move on. Interglobe Aviation rose in trade after posting strong growth in business and earnings in the second quarter. The revenue has grown by over 19%, besides a significant increase in the margins. The airline has also managed to increase its capacity by over 27% in Q2 on a year-on-year basis. Indigo CEO Peter Elbers spoke to CNBC about the company's Q2 report and expansion plans. Here's what he said.
I think one of the characteristics of the Indian market is that it's very late booking. So we're not making any sort of 24 months times of projections when it comes to precise capacity. What we have done is this capacity guidance for this year in the north of the mid-teens. We're actually very confident that we've made them. We welcome this first 6 months of this financial year, a little over 50 million customers. We gave a guidance to have 100 million customers by the end of this year. We're very confident that we're going to make it, and we're going to double the airline in size towards the end of the decade. So actually, we're basically continuing our long-term strategy in doubling the airline by the end of the decade, and yet take this whole range of mitigating measures to make sure that this double-digit capacity guidance north of mid-teens will be maintained. And so far, I think we've been demonstrating for the last 4 quarters that we're very capable in doing so.
Okay, on that note, we'll take a short break. We'll be back with all of the other top stories. Stay tuned. Welcome back. You're still tuned into markets today on CNBC-TV18. The Ford headline then, Zomato surged in trade by over 4% on the back of bullish calls from brokerages. Jefferies has retained their buy call, while Morgan Stanley has issued an overweight rating on the stock. Meanwhile, Delivery saw an uptick after a soft second quarter, suggesting better days ahead. Manglam Malu is here with more.
Zomato did well in today's trading session, and that's largely on the back of a big move that the company saw in Friday as well. Brokerages upgraded the stock. For instance, Jefferies has updated their target price from 130 rupees to 165 rupees, while they remain bullish on the stock, as they say that the overall GMV grew at an impressive 47%. That's not all. Blinkit has turned contribution positive. There has been a higher contribution for Zomato coming in from Zomato Gold from 33%. That has jumped all the way up to 40% as well. And the management says that they're on track to deliver Blinkit EBITDA positive or break even by the first quarter of FY25. All these things make them positive on the counter. That's not all. We had HSBC also right on the counter. They said that the guidance of the third quarter is strong too, with the food delivery business growing in high single digits on account of all the events and festive season too. So they have a target price of 140. They've increased it too. And Morgan Stanley says that they see an upside risk to their own estimates for the company that they have for FY24, and they've upped their target price to around 140 as well. So that's about Zomato. As far as delivery is concerned, that stock opened in the red in today's trading session, and thereafter it saw a big recovery. Why was it that it opened in the red? Well, because the second quarter results were slightly muted, flat performance quarter on quarter when it came to revenue. The company continued to make EBITDA losses to the tune of 15-16 odd crores, and in the bottom line they made a loss of 103 odd crores. But that was largely because of the shift of the festive season, and the reason why the stock recovered from the lows was because, one, they have strong cushion in terms of cash of around 5,500 crores. Net working capital days have reduced from 38 to 28. And October express parcel volumes were over 70 million. This compares with the second quarter of 180 million itself. And they had multiple wins in the second quarter from new and existing clients when it came to orders. And they've been expanding their network as well. So all those synergies and the growth path ahead is what the street looked at, ignoring the weakness that we saw in the second quarter.
Okay, all right, Manglam, thanks very much for that. But staying with earnings, beauty brand Nika reported a profit of just under 6 crores. This was largely driven by other income of 8 crores. Nika's revenue crossed 1,500 crores at a growth rate of around 22%. Margins have expanded compared to last year and stand at around 5.4%. Well, moving on, PB Fintech surged nearly 4% after its losses narrowed in the second quarter. The company reported a net loss of 21 crores against a loss of 187 crores last year. Surbhi Sutaria is here with more.
Thanks so much for that. So PB Fintech reported a good set of numbers. It was a strong top line, and also the profitability has improved on a year-on-year basis. Revenues were up 42% on a year-on-year basis, and growth is coming in from the core business, Paisa Bazaar and Policy Bazaar, both of which grew over 45%. And also their new initiatives business grew at 31% on a year-on-year basis. The adjusted EBITDA profit came in at 13 crores versus a loss of 53 crores same time last year. It reported an adjusted EBITDA margin of 2% versus negative margin same time last year, and net loss of just 21 crores versus loss of 187 crores same time last year. So losses are reducing and strong revenue growth, and that is what the street is liking today.
Okay, all right, Surbhi. Thanks very much for that. But let's move on to the fifth headline then. Bharat Forge gained over 4% on the back of the strong second quarter. The revenue surged around 21% on a yearly basis, while margins were up 270 basis points. Sonia Shenoy is here with the details.
Very strong numbers coming in from Bharat Forge. Across the board, a revenue growth of 21% is what the company clocked in this time. The margins were very strong, up 270 basis points year on year, while the profitability went up about 30%. The star of the show really was the defense vertical for Bharat Forge. It saw new orders worth 1,100 crores in the defense vertical and spoke about a 3,000 crore executable defense order book over the next 24 months. The commentary from the management was also quite strong. They expect this momentum to continue in the second half of the fiscal. And on the balance sheet as well, there is some improvement that we've seen. The long-term debt has been reduced by almost 11% year on year, coming in at 2,175 odd crores. If you break it up, the shipment tonnage for the company in this quarter has gone up 15% year on year, and both the domestic and the export revenues have clocked in a growth in excess of 20%.
Okay, all right, Sonia. Thanks very much for that. That's on Bharat Forge. Moving on, JSW Infra reported a good set in Q2 with a healthy surge across parameters. The management has also guided for a stronger second half of the fiscal versus the first. The company's joint MD and CEO Arun Maheshwari spoke to CNBC-TV18 about the company's performance. This is what he said.
So if I have to look only at Q2 of FY24 with respect to Q2 of FY23, the overall volume has grown up by 26%, the revenue has grown up by 29%, and the EBITDA has grown up by 33%. EBITDA has been largely higher because of the higher base of volume, and thereafter the operational efficiencies have kicked in over there. If I have to compare H1 to H1 of FY23 vis-a-vis HY24, the total throughput volume has been 17% up, revenue has been 16% up, and the EBITDA has been 17% up. So it's all in tandem, basically. So typically, one thing which we must note about that in India, the monsoon is very heavy, especially on the west coast of India. It's very, very heavy in Q2 of any year. Generally, the volume tend to go low. Historically, we have seen that H1 is slightly lower as compared to H2. So we will be witnessing that as we move forward. H2 is likely to be slightly better than H1.
Okay, moving on, JK Cement rallied close to 9% after a good second quarter. The strong volume growth aided sentiment. Vivek Iyer is here with the details on it.
Well, after JK Lakshmi Cement that delivered a handsome beat versus analyst estimates, JK Cement was the other cement company that once again delivered a handsome beat against what the street was anticipating. Volume growth across both grey cement as well as white cement was quite strong, and on the back of that, the company delivered a robust quarter as far as Q2 FY24 was concerned. When you're talking about the volume, sales volumes were higher by 22% on a year-on-year basis, and on the back of that, as well as strong realization, revenues went up by 23% on a year-on-year basis. The operating profit jumped up by 51%. This was on the back of the fact that you did see lower petcoke prices in the quarter gone by. Talking about margins, margins expanded 220 basis points once again on a year-on-year basis, and aided by that, profitability went up by 61%. JK Cement was one of the top performers as far as the F&O space too was concerned, given the fact that this strong beat helped a lot of analysts on the street to go ahead and upgrade their EPS targets for the stock.
Okay, all right, Vivek. Thanks very much for that. Well, a whole host of players in the chemical space were buzzing in trade today. Aarti Industries shot up by 11%, after reporting strong sequential growth in the profit for the second quarter. Gujarat Fluoro, on the other hand, saw an 85% drop in terms of profits. Sonal Bhutra is here with the details on these companies.
For Aarti Industries, it's the sequential recovery that the street likes, and it's the only large chemical player which has seen a sequential recovery. So definitely a thumbs up there. But as you said, on a YOY basis, it was a weak set. Revenue down 14%, EBITDA down 13%, profits down 27% for the company as well. But on a quarter-on-quarter basis, revenue up 3%, EBITDA up 16%. There has been a margin expansion to the tune of 200 basis points, leading to a profit growth of 28%. The company says that the performance was improved on sequential basis due to increase in volumes in several products. They also say they are witnessing gradual demand recovery across segments on a quarter-on-quarter basis, and second half of the fiscal will be better than the first half. They see FY25 as a normalized year, meaning that demand and volumes will come back to normalized levels, and long-term EBITDA margin target remains at that 25 to 30% mark, and that is something which is exciting the stock today. For Gujarat Fluorochemicals, it has also recovered from the lows on the back of some positive commentary, but yes, it was a weak set, no two ways about it. Revenues down 35%, EBITDA down 70%, margins have halved on a YOY basis, leading to a profit decline of 85%. However, the company says that they expect margins to improve in next couple of quarters, expect full recovery by Q1 FY25, and FY25 will be better than FY23. Now remember, FY23 saw abnormal profits, so that means going ahead, when all the facilities come on stream, they will have 30% margins in FY25. Additionally, Morgan Stanley has an interesting note on the chemical sector, where they have upgraded SRF and Aarti Industries to an overweight. However, they have downgraded Navin Fluorine to an equal weight, and they have double downgraded PI Industries as well. There has been a change in target prices as well. It will be on your screen. So that is largely what has happened with these companies, and that's the reason why the entire sector is in focus today.
Okay, all right, Sonal, thanks for that, very much for that. On that note, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.